Hi traders, another week of technical Tuesdays. And we're starting off with the DXY dollar index as per usual. What we can see here is price obviously broke through that upper resistance line of the channel that it's been in since last year, November. It peaked, there was a doji candle just before 97.5 basically. The RSI got up to just shy of overbought territory. It's now rolled back over beneath that 55 former range resistance here. What I also noticed is, and I'm sure you did too, is that the RSI here made a higher peak back on that high on 24th of November compared to this high here. So price pushed higher, but the RSI didn't confirm it. Negative divergence if you're drawing a trend line there. And that actually obviously showed that selling momentum was weaker and was likely to reverse. We got the 50-day simple moving average here at about 96, along with the 21-day exponential moving average. So we'll have to watch that zone in terms of downside targets if the sell-off continues. Moving on to the Euro US dollar, it's had a strong rally back. We're now back at this trend line, this support line here of the sideways range at about 112.5. We're just above that, so we've got a bit of resistance here again. 50-day simple moving average and the 21-day exponential moving average at the round number of 113. If price pushes higher, we'll have to see how it goes. Again, like on DXY, we saw some negative divergence here. Price made a lower low, but it didn't make a lower low on the RSI, so that showed that selling momentum was coming to an end and it was a bit exhausted, and that's why we saw that little bounce up there, besides other factors obviously, but that was one of the factors to confirm it. We'll see what the RSI does, if it can push above this 52 resistance here, how price reacts when it gets near there. GBPUSD again got sold off, dropped below 50-day simple moving average, held just around the 61.8 Fibonacci percentage level. And yeah, now we're rallying into the 38.2, close to the 21-day exponential moving average. That's around 1.35 to 1.35 if you're looking at the 21-day exponential moving average. The RSI again is running higher. It's turned around and it's heading. We'll see what the RSI does when it gets close to that 54 level. Then moving on to EURGBP, we see that it really cannot seem to take out this 0.83 level. Since the Brexit referendum, it's touched this level 6 times and just can't seem to knock through it. I would have thought maybe with the BOE meeting on Thursday, it might have finally been the case, but now that we've rallied about 52 pips off this level, may not come on Thursday, but we'll have to see. 0.825 would be the target if it breaks 0.83, the first initial target, and 0.82 from there. On the upside, we'll see what it does around this 21-day exponential moving average. There's also a bit of resistance here at 0.836, 0.835. The RSI is kind of in the middle of nowhere, but tiny bit of negative divergence again. We see price made a lower low and the RSI didn't make a lower low, so yeah, positive for the bulls. Dollar yen, we're back. We seem to be back in this overarching range here between 115.5 and 113.5. Price has got up there and it's selling off now, but the RSI has turned lower and it's heading south. We've got the 50-day and the 21-day exponential moving average close by, as well as that former range resistance there too at 114.5. So that would be the area of interest if price continues to sell off lower. Moving on to the Aussie dollar, we're seeing it nice and strong this morning off that RBA meeting, and it's rallied up into this sort of 0.71 area. We'll see if it can break above there. Another interesting chart to put on the radar, GBP AUD, we got that 1.9 level right here. which price is trying to get towards. And if it can break through that on GBP AUD, I'd say the next major level of support would be around 188. Yeah, and then obviously it's always good to have a little look at AUDJPY, my risk barometer. I mean, we can see risk was quite sentiment was quite sour, got back down quite close to just below 80.5, and it's rallied now higher, and we are looking towards the 38.2% Fibonacci level at 81.8, and they've got the 50-day simple moving average just above there. So we'll see what price does when it gets up to there. That's it for FX. Let's move on to commodities. We've got gold that's trying to also stage a rebound after it broke through its ascending channel there. It's right on the 50-day and 200-day simple moving average at the moment, just peaking its head above the 1,800 mark. The RSI is trying to bounce again, and the 62 level on the RSI really is key. We can see how many times it's touched it every time it's tried to push high and it's been sold back down. Even recently, it got up there and got sold back down. So targets wise on the upside, I'd like to see what happens around these moving averages here. Maybe a push higher around this 1815 area, and on the downside 1775 would be the target, which it got quite close to recently. And then if we move towards Brent crude, we can see it sort of drop below this trend line, but it's still sticking to it pretty closely, and price is hovering around the $90 mark. Tiny bit, you could say potentially, although a tiny bit higher, but you would expect it to be a bit more significantly higher given the difference, the magnitude in price here between that high and that high there. So the RSI's dipped just back below overbought territory. So there's a tiny bit more room, maybe run into that 92 area, which the price just got shy of last time high of about 91.68 on the 28th of Jan. On the downside, you've got 85 here, which is the sort of former resistance for that high back in late October of last year. And then if we look at this is very interesting. So value rotation, iShares value ETF divided by iShares growth ETF ratio pushed above this two level here, which has struggled to previously. It got above, got just shy of 2.9. Now it's really rolled back over as risk sentiment and the S&P has been rallying. Growth stocks are doing well, and yeah, this has rolled over quite a lot. We'll see if it can hold this level and have a little bounce, but yeah, really important, really interesting. And then lastly, to finish off like I usually do, just a quick look at the interest rate pricing market. So we got 5 hikes priced by December and almost 100% for one in March. It's a lock. 1.5 April, we got just over 3 by July and borderline 4 for September. Thanks for joining this week's Technical Tuesday. I hope you found it useful, and I'll see you next week.